The Ag Economy Barometer index fell 12 points to 140 this month, but that was still 25 points higher than it was back in October. The current condition index fell 5 points to 132, but again, that was still 37 points higher than it was in October before the November election. The future expectation index fell 15 points this month to 144. That was still 20 points higher than it was in October. And the future expectation index, of course, was what drove the Ag Economy Barometer down predominantly. Farm Financial Performance Index fell 8 points to a reading of 102, but again, still 12 points higher than it was back in October. Farm Capital Investment Index fell 5 points to 54, but that was still the second highest investment reading we've received since June of 2021. The short-term farmland value expectation index at 118 was unchanged from February and suggests that farmers remain cautiously optimistic that farmland values will either hold steady or perhaps increase modestly in the year ahead. Producers' expectations for U.S. exports in the next 5 years reached an all-time low in barometer surveys, with the 30% of producers who expect to see exports fall, nearly matching the percentage of producers who expect to see exports rise, suggesting producers' outlook for ag exports, which predominantly have been a real source of growth in the U.S. ag sector for decades, really shifted. We asked producers which of the following policies or programs will be most important to your farm in the next 5 years. And there's really been a shift with respect to the importance of trade policy versus interest rate policy since the November election. Back in August, before the election, 22% of the respondents in the survey chose interest rate policy as one of their top concerns versus 20% choosing trade policy. Since the election, over 40%, an average of 43% of the respondents in the survey have chosen trade policy as their top concern, while the percentage choosing interest rate policy as a top concern has been falling, and this month was just 10%. This month's survey included a question that said, if a trade war leads to lower prices for U.S. ag products, how likely do you think it is that farmers will receive compensation similar to 2019's Market Facilitation Program? 52% of the respondents in this month's survey said they thought that was likely, 13% very likely, so 2/3 of the respondents think it's either likely or very likely that we'll have a program that resembles the 2019 Market Facilitation Program. That wraps up the highlights for this month's survey. You can get more details on our podcast, which is Purdue Commercial AgCast. You can also download the full report from our website, purdue.edu/agbarometer.